Hello everyone. In this video, I will share some useful tips and strategies to help you with your trading. If you find this video helpful, please give it a like and subscribe to the channel. Now, I'd like to review the EURUSD chart from the past few days and discuss the outlook for the future. Before we begin, let me explain two key points about my analysis method. The first point is multi-time frame analysis. To confirm the long-term trend, I start by analyzing the weekly chart, followed by the daily 4-hour and 1-hour charts. Checking the long-term trend is essential in trading. When making an entry, I also analyze the 15-minute and 5-minute charts. Additionally, I follow Dow Theory for my analysis. To briefly explain, an uptrend is defined by higher highs and higher lows, while a downtrend is defined by lower highs and lower lows. A trend reversal occurs when this pattern breaks. If the price breaks below the most recent low after reaching a high, a downtrend begins. Now let's take a look at the EURUSD chart. First, I'll walk you through this week's price movements. This is the weekly chart. This week, we see a bearish candlestick with an upper shadow. Similar to last week, the bullish momentum appears to have temporarily slowed down. The long upper shadow indicates strong selling pressure. If the market can negate this upper shadow, we could expect another upward move. Next week, we'll be watching closely to see if the uptrend resumes or if a deeper correction begins. Now here's the 1-hour chart. The yellow vertical line marks the position of last Monday. This week, we saw a sharp rise at the beginning, followed by a decline toward the weekend. In last week's video, I mentioned that many buy positions had not yet been closed, suggesting a strong possibility for further upside. Understanding market psychology is very important, so if you haven't watched that video yet, please check the link in the description. Currently, on the 1-hour chart, price has broken below the recent higher low, suggesting the beginning of a corrective move downward. However, the 4-hour, daily, and weekly charts are still in an uptrend, meaning there is still a chance that the market could attempt to reach new highs. Whether this becomes a full-fledged correction depends on whether the 4-hour chart also breaks its higher low and shifts to a downtrend. Now let's analyze the market again from the weekly time frame. On the weekly chart, this is the wave structure we are assuming. Since the resistance line on the weekly chart was broken, based on Dow Theory, we are considering the weekly trend to be upward. However, the current position is at a high level after a strong rally, meaning buying here would carry higher risk. That's because there is a good possibility of a correction like this occurring. For more conservative trading, it's better to wait for a pullback to form before looking for buy opportunities. As I mentioned in the previous video, there's also a possibility that the market could form an inverse head and shoulders pattern like this. This scenario remains valid for now. Now moving on to the daily chart, we can see a strong ongoing uptrend here. The recent bullish momentum is very strong. The higher low is at this level, and as long as it remains unbroken, the daily chart will continue to be in an uptrend. Therefore, we can assume this kind of wave structure. Since both the weekly and daily charts are showing an uptrend, the basic strategy is to look for buying opportunities. However, if the price keeps pushing higher from here, we can also consider short-term selling strategies. In that case, it would be better to wait for a clear reaction at major resistance levels like this or this before taking any sell positions. Next, let's check the 4-hour chart. For now, we can see that the market is forming an upward wave like this. After last week's rise, the higher low on the 4-hour chart has shifted to this level. As long as the market doesn't break below this point, the uptrend on the 4-hour chart remains intact. Although the weekly, daily, and 4-hour charts are all showing an uptrend, considering the possibility of a correction, entering long positions without caution would be risky. Going forward, whether the market breaks below this higher low will be a key point to watch. Also, since we can draw an ascending channel like this, it can serve as a reference for a possible trend reversal. Now let's move on to the 1-hour chart. On the 1-hour time frame, the market has already broken below the higher low, and a downtrend has started. Currently, we are considering this level as the recent lower high. To summarize, the weekly, daily, and 4-hour charts are in an uptrend, while the 1-hour chart is in a downtrend. We can recognize this as a short-term correction within a long-term uptrend. Now let's discuss the trading scenarios going forward. First, for the bullish scenario, Since the market has already risen significantly, I'm not planning to enter new long positions from here. If I were to consider buying, I would wait for a correction and for the 1-hour chart to shift back into an uptrend around this area. Keep in mind that by then, the 4-hour chart might have already shifted to a downtrend by breaking its higher low. Next, for the bearish scenario, since the market has already risen sharply, I would prefer to prioritize shorting the corrective waves starting next week. There are two clear resistance lines on the daily chart. Ideally, the price would rise further toward one of these resistance levels, react there, and then show a clear trend reversal on the lower timeframes before we consider short entries. Also, when aiming for sell entries, it's important to watch whether the market breaks below this ascending channel. How did you find today's analysis? If you found it helpful, please give it a thumbs up and subscribe to the channel. I hope your trades go smoothly and successfully. Best of luck.